All businesses that generate a turnover of up to 5 million shillings annually have been exempted from the eTIMS requirement. eTIMS stands for Electronic Tax Invoice Management System. This system was introduced by Kenya Revenue Authority in an effort to manage those expenses that you business people are claiming against your incomes in an effort to reduce your tax liabilities. But most of those expenses, many of them are cooked through what we normally call manipulative accounting. So introduction of the eTIMS system was targeting expenditures claimed by business people and making them disallowed if they are not or if the invoices are not generated from the KRA eTIMS platform. So what essentially happened or what was required was that all businesses, those vertible ones and the ones exempted from VAT or not included in the VAT requirement or obligations, they were all supposed to onboard on the eTIMS platform for the same reason, because VAT is on an agency platform on a basis of the net of your output and input VAT taxes. But for purposes of the business income taxation, the corporate tax for companies, and the shared business income tax for partners and absorbed on the sole proprietors, most of the expenses that are claimed by businesses, some of them are not very viable. And therefore, on the essence of exemption of incomes and allowance or disallowance of expenses for deduction purposes is what was targeted through the eTIMS platform. But what happens is that these came also as a disadvantage to the businessman and by extension to KRA on collection of taxes, in the effort that big companies or the larger companies were rejecting supplies from smaller companies that could not meet the onboarding requirements. And for that reason, that hit has been felt by KRA or the government in reverse by not meeting their tax obligations in terms of their tax revenue targets, because most of these businesses, they had lost their supply business to larger companies, especially the likes of supermarkets and the like. So in an effort to counter that negative effect, small businesses with the turnovers of up to 5 million are now exempted from the eTIMS requirement. They can generate their invoices without using the platform. On and above the eTIMS requirement or the question of allowance of expenses for tax deduction, we have the question of VAT and the smaller version of VAT. VAT is value added tax, and the value addition is in many forms. Value addition could be adding actual value to a commodity through processing. If you purchase raw materials and you process them into a finished good, there is a value addition. If you move these goods from point one to another point, that is a value addition. So whatever value has been added results to an increase in the selling price. If you are buying from a wholesaler to retail those products in a different location, you will have added value through that movement of bringing those goods closer to the users, and that is what necessitates the increase in your selling price, and that increased price attracts a value added tax, where your output tax or the 16% that you charge your customer, you are going to compare that one with the 16% that was charged by the wholesaler that sold that good to you. Then the difference of your output, what you charged your customer and collected from the customer, and what you got charged by the wholesaler, you deduct the input from the output, and the net difference, that is what is payable to the taxman. But we have requirements for onboarding on the VAT obligations. Businesses, you can either register for VAT obligations if you are meeting or you are making turnovers that are above 5 million. If you are doing business of less than 5 million, you are required to register for TOT. If you are below a million, then you are exempted from all those form of taxes. Moreover, the request by Kenya Revenue Authority for an amendment through the tax laws to compel businesses to disclose their business secrets and give supply informations and also transaction information to KRA as a way of maximizing their nets to catch those tax cheats has also been rejected, and that brings in the older form of ways that the revenue authority gets to know what has been used by other businesses in their tax cheating by way of lifting the VAT system management system, lifting PIN numbers from the system of those that supply to bigger clients and they have not disclosed that information in their filing or they did not file at all. In that management system, then this has not been or will not be granted to force businesses to disclose their business secrets and their supply information. And that coupled with the exemption to onboard on the eTIMS platform will be a big relief to these small businesses and companies that are generating turnovers that are below 5 million shillings yearly. And looking from the real picture from markets, most small businesses survive through purchasing or getting their materials or their goods in systems that evade taxes. And that is one of the things that made the onboarding problematic. But there are so many ways that one can use legally to reduce their tax liability within the tax laws, and that is what we generally call tax avoidance measures. Because any measure that you apply to reduce your tax liabilities that is not supported in law, that can put you in a lot of trouble in the category or in measures that are classified as tax evasions where the penalties are hefty and too expensive for businesses. But the general is that this relief or from onboarding on the eTIMS platform for small businesses is a huge relief because they will now be able to do their business with the bigger suppliers without the requirement to generate invoices from eTIMS. It may have a delay in its implementation and also acceptance by bigger clients who have already build roots in this onboarding of the system, and the challenge that will come in their claim of expenses from the taxman when they are using receipts that have not been generated by the own team's platform from these small suppliers. We are waiting to see how that one unfolds, and we shall be keeping you posted over this channel. This is one of the main platform or the key power information that enables us to create this platform, and we will continue giving you more on taxation measures and the different ways that you can use to manage your taxes come the new year, because we are not only going to be looking at forms of investments but also how we can expand our incomes through tax management and utilization of our free assets to build more incomes. Thank you for watching.